Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. Today I'd like to go through and look at the US E-minis and how they unfolded yesterday. That would be Wednesday, March the 14th. So as usual, let's have a look at the 15-minute charts. I'll just drag this across here, and I've got some 15-minute charts tabbed here in MTPredictor version 7. On the YM, you can see we didn't really have any levels of DP resistance. The market was going straight up, and this is what we were talking about in our training webinar yesterday. The only resistances were on a daily chart. The market then declined down and was getting some buy setups a bit later in the day. But on the NQ, so I'll just take that off, I had that on there already. The NQ was the one that interested me the most, and I'll come back to that in a minute. Because on the ES, you can see here we were way beyond decision point resistance, up here into sort of no man's land. Again, the only kind of resistance was actually on some daily charts, which I'm not going to show in this webinar. When the markets backed off down, we were getting into some support a bit later on. Same kind of situation with the Russell Index. Early on, the market was way beyond any kind of resistance. We're around here. If I put on the session line breaks, you can see this was the day yesterday where the market declined down into support there. But the one that really interested me, again, if I put on the session breaks, you can see that this is how the market unfolded. So if I give a bit of space there and I go back to around about here, this is what we tend to do with our 15-minute DP. So you can see we made a pivot high. So what we can do is right mouse click, put the decision point level on, and you can see that is on the chart there in advance. If I zoom in a bit, there it is, 15-minute decision point resistance on their chart ready beforehand. Market now is around about 12 o'clock, so you know we're quite a long way away from this. As you can see here, the market did actually rally up and hit this level at around just 1 o'clock. So the point being is that at least an hour beforehand, if not more, you're prepared for this particular decision point level. And if I scroll forward, you can see that actually now the very high of the day with the market backing off nicely. So the question being is, now you know that we were at, just drag that across a bit so we can still see it. Now we know we were at decision point resistance there on the 15-minute chart. What could we have done on the 3-minute chart? Well, actually what I'll do now is I'll just change this 3-minute NQ chart to a 15-minute chart, and I'll show you what we can do in version 7. If I put that same decision point resistance on there again, there it is, I'll go back to the 3-minute chart. So this is what you could have had as the market was unfolding. You could have known well in advance, here we are, here's the situation, well in advance you could have known that this decision point was a 15-minute resistance and it's on your charts in advance. And here we are, as I said, at least an hour if not longer beforehand. So as the market progresses along, you're fully aware of that level. You can see the market starting to creep up to this level. You now hit that resistance level at that time. Now, advanced traders among you, this is probably an advanced setup because it's against a blue SCF. Advanced traders among you could have said, and actually I know a couple of traders actually have emailed in yesterday with this very trade setup that they did on their own accounts. You could have said that because you're at 15-minute resistance, you want to take a trade off the 3-minute chart. Target would have been a DP, would have been the 3-minute DP off here. If we put the risk reward on, remember we use correct position sizing here to get our profits in terms of risk reward units, not just absolute dollars, and that allows us to keep our risks small and under control, and I'll show you exactly why. Market takes you into a short trade and then goes and stops you out. So yes, this would have been a -1 hour loss. However, we were still in 15-minute resistance. So let's do it all again. And here we are, a potential 4-hour profit this time. So let's see what happens. Market now reverses back down, takes you into a short trade, this time for 5 contracts. Notice how the number of contracts has changed to keep the position sizing small and constant. That is the key to correct position sizing. Market now declines absolutely beautifully to reach, as you can see, reach the first target just about there. But the beauty here is that this has now nailed that high absolutely perfectly. So a very, very nice decline down into here. Normally I would say because the STF is strong, I'd suggest that this was an area where you want to use the ATR stop to run it, and if you did use the ATR stop to run it, it would have gone a little bit further and would have come out just about there. So at the very least it would have been a plus 3.6 hour trade. But if you're an advanced trader, I'd be very wary of doing that, because as we've seen on some of the other markets, the ES, we were having support come in at those areas. On the Russell Index, again, we were having support coming in these areas. On the YM, again, we were having support coming in these areas. So this is quite nice where you can have these tabbed like this side by side, so you can keep half an eye on the 15-minute chart. So the point I'm making is that normally we would suggest running these trades a bit further using the ATR stop, but because on all of these markets at this low here on the 15-minute charts we were getting potential support zones, I'd probably suggest that it might not be a good idea to run the trade, because the likelihood is that the market was then going to rally off these levels, and as we can see, that's exactly what it did. So this is a good example yet again of how to use the 15-minute charts on other markets to help you manage a trade on one of the other USE minis, because they tend to all work together, particularly if you're trading a market that's not the ES, because the ES tends to be the boss. So anyway, the result of this is that we had this 15-minute DP on our chart in advance, at least an hour in advance, and as you can see, that nailed the very high of the day for you. We had a first attempt to come in at a -1 hour loss. Loss is kept small and under control, that's okay, because the second trade had you short off the very bar of the very high of the day. That's always a nice situation to be in. And if I put the session line breaks on, you can see that effectively you were taking profit at around the decision point level, which was almost the low of the day. So you had a short trade from the high of the day into this decision point target for a plus 4.4 R. So take off the -1 R loss earlier, and that means plus 3.4 R for the day, which was a very good result. So this was an advanced trade for the advanced users among you. Were there any standard trades? Yes, there were on the YM. These ones here were sell setups, but they were against the blue STF, so standard traders will not take them. The one trade on the YM that was an automatic and standard setup was this TS1 sell. If I put the analysis on, again there's our position sizing. Sell against the black STF is okay. Market comes down, tags our first target, STF is weak, you come out with a lovely plus 2.4 R profit. So for standard traders among you, there was a very nice trade set up on the YM. But today's video is really all about the NQ, and particularly how we set up the NQ on this 15-minute resistance in advance to then be able to get a trade off the 3-minute chart, again from the very high of the day into the first target. We then came out at the first target because of the support on the other 15-minute charts, and overall, as you can see, a very good result for both standard and advanced traders among you using MTPredictor yesterday.